I'm Hiroyo. One of the most common ways for companies to raise capital is through equity. But as a founder, isn't there always a quick hesitation? You want funding, but you do not necessarily want to give up control or voting rights. That is when I began to think, what if companies could raise capital through NFTs? In a broader sense, NFT sales can also function as a form of capital raising. Before going further, let me be clear. I previously served as the CEO of an investment advisory firm in Japan. I am not rejecting equity. Stocks have many strengths. If I were to simplify it, equity is capital that divides rights. NFTs can be seen as capital that shares meaning. NFTs are digital assets. They are not securities, and they are not cryptocurrencies. However, they contain financial characteristics. From a company's perspective, NFTs do not transfer governance rights. Founders can secure capital while fully preserving their vision and control. Now let us look from the investor's side. Equity provides the financial value, voting rights, and dividends. NFTs can offer financial value plus additional layers such as art, culture, identity, or utility. If the financial value declines, a NFT may still retain artistic or cultural value. Having multiple layers of value can provide psychological reassurance to investors. For example, I own an avatar NFT from The Sandbox. Its market price dropped significantly. Yet without that avatar, I cannot participate in the game. So I still value it. My own project, Love 2 Kids, is a paired NFT held by two people in love. It is like a digital version of matching links. The core value is not speculation. It is the idea of engraving love onto the blockchain. Wabi-sabi AI, on the other hand, AI-generated Japanese art. NFTs can combine financial aspects with emotional or cultural dimensions. This is similar to luxury watches, jewelry, or designer bags. You use them in daily life, and later you may resell them. However, NFTs have one major difference. They do not deteriorate. A physical item can wear out. An NFT does not. Of course, if I say there is a high probability you will lose money, no one would invest. NFT markets have lower liquidity than stocks. They are still immature. They are also carry a speculative image. That is why design matters. So, what makes an NFT attractive to investors? I believe there are two key elements. First, distinctiveness. If anyone can create it, it has no moat. It must be something only that company can produce. In my case, I integrated finance with love and Japanese culture. That is my differentiation. Second, continuous value creation. Investors must believe the asset can gain value over time. Let me share a simple example. I once owned two trading cards. One featured a globally recognized character. The other featured a once popular anime character. Both were acquired more than 5 years ago. When I checked resale prices in Japan, the first card, graded PSA 10, was trading for nearly 200,000 yen. The second was worth less than 100 yen. I compared merchandise, plush toys, and other goods. The pattern was the same. The difference was not design quality. It was continuity. The characters that retained premium value were the ones that never stopped. Longevity builds fandom. Fandom builds value. Time becomes an ally. If I stop Lab2Kids and Wabi-Sabi AI today, they become a historical footnote. But if I continue and one day Lab2Kids collaborates with global brands or integrates into national marriage systems, or Wabi-Sabi AI becomes recognized as a new form of Japanese AI art, the perception of value changes. There is no guarantee of price appreciation. But there can be intentional design for value preservation and long-term growth. Raising capital through NFTs is possible, but it must consider both founder benefits and investor outcomes. That is the design philosophy behind Lab2Kids and Wabi-Sabi AI.